are going to talk about data-driven decision, backtesting, forward testing. This is probably one of the hottest topics in the last 2 or 3, even 4 years. And we will dive into that, try to understand what it is about, how can you take that and actually find your own niche within that and potentially make money out of that. So we're going to cover that as well. But like always on my webinars, I don't like to do it solo. So it's not going to be a monologue. Please join me and let's do it a dialogue. So I will ask you some questions along the way. Please drop them, the answers in the chat. And of course, if you have any questions, feel free to write it as well. I will answer hopefully all of them. And we will wait until the end to answer everything. So don't worry about that. And also we got the guys in the back that will cover and help as well. So let's start by just getting to know each other. Let me know where you come from. And of course, what are you trading? Do you like to trade stocks, futures, commodities, options, Forex? Let me know what are you trading, what do you like? And also if you're a swing trader or a day trader, it's always interesting to understand who I'm talking to. And we can also understand that and take the presentation into a different angle if I'll see some different answers, basically. So, of course, most of you guys stick to your Forex, and that's great. We're going to talk about generally the back testing and the forward testing that we will cover. I will do that on the NASDAQ, on the index. But, of course, you can definitely take that to any type of asset that you will choose to trade. The concept will remain the same. Of course, each market will have its own nuances, but the idea is the same on this one. So, okay, I see some Forex, some indices, gold. You cannot go wrong with gold these days. Okay, day trading, swing, I'm loving it. By the way, before we dive in, make sure you subscribe and click the bell button. So Google algorithm will sign you in and see that you're legit, basically. So click the subscribe button that you have and also the bell to get notified for next videos. Make sure you do that. All righty. Nice. We got some good vibe here today. Okay, let's dive into that, guys. So first thing first, a quick introduction. So my name is Michael Katz. I'm the CEO of Trade Pool. We are an online platform that funds stock traders, a part of the Fivers group. And myself, I've been trading for a while now, stocks and futures for the last 17 years. Also been ahead of traders in a local platform before that. And now, as you understand, we are doing this on our live channel. We have a live channel that runs every Monday till Friday that we have. We are hosting. We have our host Mitch, where you can trade live with us every single day. We trade stocks mainly, but of course, for those of you who like to trade indices, you can definitely trade with us. Also, ETFs. We have more than 1,000 of those. So all the big names, the NASDAQ, S&P, Dow Jones, Russell 2000, gold, Bitcoin, you can trade anything with us within the ETF. So make sure you check us out as well. You have 14 days free trial to play with and understand the trading platform. Alrighty, so the first question that I have for you guys is, do you think that backtesting is the right way to go? Do you think backtesting is important for your trading? And if so, if your answer is yes, make sure to write also why do you think it's important. So not just it is important or not, but actually understanding why. That will lead us to the next move and next understanding. Okay, so let me know, guys. Do you think backtesting is good for you, important, crucial to your trading? And if so, why is that? All right, I'm going to sip my coffee while you're writing. Okay, the trading job, you're saying yes. To understand winning ratio. Okay, most of you are saying yes, important. Okay, I do see one interesting comment here. Tons of comments, so I like that. But the behavior, definitely, the guy that wrote the behavior is different every now and then. So that's super important, and that will get us to the next stage or the next phase we want to touch on. So basically, when you're saying, yes, backtesting is important, it means that you feel or think or you saw that the market behaved the same way, right? Because you're basically saying that if I'll go back and test my results or test a strategy and it will work and prove itself, now it means that also in the future it will work as well. That's basically what it means when you're saying that. So, and that's obviously that's what we do when we use technical analysis, right? We go back to the supply area, demand area. We're looking at the history of the chart, the history of the asset, and then we realize or predict what will be the future outcome. So that makes sense. Going back and realizing what we need to do next. But, and that's the important part here, I want you to think about your trading, your trades that you made in the last few days. Let's take 5 trades that you did today or yesterday, or maybe a week ago. 5, 10 trades. Think them over for a second and think if the winners, obviously you had a few winners, few losers. Think about the winners. If you're going back 5 trades, like a few days ago or a day ago, the last 5 trades, your last winner, think it over, and also try to understand, try to think about the previous, the one before it. Are both of them did the same? Did you enter at the same place? Did you take your profit at the same place? Did you manage the trade the same way? Think about your losing one as well. Are both of them were the same? You took your loss at the same place? You took the same risk, the same dollar risk? The answer is probably no, as you're already starting to write right now. And the thing about it, and that's the most important thing when it comes to backtesting, although we rely on the history, right? History repeats itself. We rely on the history to be similar to the future, but at the end of the day, it's not about the technical, it's about the psychological aspect of it, right? Meaning that 2 trades, 2 setups that's supposed to be the same will give different result at the end. Because when you click the mouse key yesterday on a good trade, and you took it, let's say morning time in Europe, you click the mouse key and took that trade, and a few hours you took another trade, your psychology wasn't really the same on both of them. And this is why the outcome will be different as well. Even if both of them would win, at the end, the mouse key, when you clicked on it, your mentality wasn't exactly the same. So once you remember that, you realize that backtesting is great, but you got to keep in mind that only when you're making the decision, that will be the point or the important element that will reflect or basically, reflect the outcome of the trade, right? So this is a point that you gotta all remember, that backtesting might be great, but if you don't take into consideration the psychology within those decision making, this is where most traders will fail. They will go to a backtest, will run a strategy, will see tons of return, but at the end of the day, when they take it and start trading it, they will see a totally different gain. So super important to remember that exact point. Alrighty. Now, going back, and we do want to understand why it's not working. And as I said, the psychology aspect of it will take a big chunk of that. What we want to really do is to go and understand the elements that will change your strategy, right? So for example, if you're going back and testing before really going into the programs, the platforms that give you the opportunity to run a backtest, and we'll dive into that in a second, what you want to do is actually first go to the core of it. The core of it, it means that you want to learn the price action. You want to learn supply and demand. You want to learn momentum, basically reading the chart, reading the market way before you go into depth and diving into a specific strategy. Why you want to do that is pure simple, because once you go over tons of charts and learn how to read the market behavior, now from there, you will start to recognize some patterns that repeat themselves over and over again. When you just try to focus on a strategy, let's say 20 EMA crossing up 50 EMA, right? That's a super classic one that a lot of traders start with. Once you're doing that, you're basically missing the whole point of trading. And because trading is first about understanding the structure, understanding from the sentiment, from a top point view, and then diving into a specific trigger, a specific setup. But if you don't understand the sentiment or the behavior of the market, you're missing 80% of the game. So at first, you just go back, you analyze the market, you read the chart, you learn momentum, you learn price action, and only then dive in, okay? Now, the way to do that, you can do that by two ways. For me, for example, before, again, it's like 15, 17, 20 years ago, not a whole lot of programs and platforms that gave you that opportunity. What I did and what many of us here in the office did was just going back day by day, going back and just looking at the market over and over again, live or history, but we did that over and over again to learn how the market behaves. But in your case, because it's 2024, you can actually use tools to make it a little bit easier or shorter. What you can do, and I'll put that on the chart here. Okay, so if you go basically to, for example, TradingView, right? What you can do is you can use the simple tool that they have that you probably heard about, at least if not tried it, replay. And the replay can give you the opportunity to watch back and see how it played out, right? Go back in time and see how it played out. So for example, if I'm clicking on the replay, now I have this bar here and I can choose a date. In most cases, you would like to choose a date way back. So it's not something that you already saw a few days ago. So let's just, for the example, let's say we'll take 9 here. Okay, let's September 6, select it. Now I'm where it is. And now what I can do is basically click on play. Click on play, and I will see the chart start forming in front of me. As you can see, the drop here, and I can play with the speed of it as well. For example, speed 1 will be every single second, as you can see here. And now I can see the chart easily. I can understand what's going on. And when I see something that I like, something that I already fit to my setup, and if I don't have a setup, then I'm learning as it goes along. Now I can start to analyze it, stop it for a second, see what the market did. For example, that's an easy one. You can you can easily see this bar or this actually resistance level, right? A resistance that became support, resistance became support, another resistance, and then maybe you can assume that the price will drop again. Or if not dropping, then it might do this. Again, I'm watching this first time as you guys, and maybe this is something that we can plan out, right? Breaking through resistance, retesting it, bouncing up again. One option. Other option, dropping from here, maybe testing that resistance line and then dropping again. Let's play it out. Again, I didn't see it. I'm just scratching here right now. Don't know what will be the outcome, but the idea of what I'm trying to do is basically create in my mind the scenarios, the potential scenarios, and then I can start building my setup or understanding. Okay, broke through, back, retested, bounce. That's crazy. I gotta swear, I swear to you, I didn't see it before that. So exactly the first scenario, right? Broke through resistance, dropped to support, and then went all the way up. So that's the concept of what we are looking for when it comes to replay, just to understand first on a bigger time scale or a bigger zoom out kind of way, understanding resistance, support, supply and demand, market structure, price action, momentum. Once you have this knowledge, and it takes a little bit of time, but now today, as you can see, you can easily do that. You just need the practice-wise. And once you have it, it's easier for you to start building the strategy once you understand how the market actually behaves. I see that you guys writing a lot of stuff, and I love it. And I will give more time at the end of the day, at the end of the webinar, to go over the questions and answer them. Thanks for that. All righty, I'm going back to the slide. And once we understand that, and we played with the replay, for example, of TradingView or any type of replay, tons of companies offer that today. Now we gotta scroll down or zoom in and understand the details of it, right? Because in most cases, what I saw a lot of traders do, and that's a huge mistake, is basically just looking for that indicator that will cross a different indicator or stuff like that. Super simple and without any understanding, like I said, of what the market is doing, what's the structure or what the sentiment. So when it comes to building your strategy, you need to dive in and actually analyzing it from few different angles, right? So for example, the time. Maybe you guys that trade in Forex, obviously you have the time where you're awake, you have the time where you go to bed. You need to understand what are the time limits or the timeline that you play with and trade, and only then look for the strategy and the setup that actually relevant to you, right? Because if you're trading London session and also New York session, even if you have the time to trade both of them, you need to realize where it will work for you better, London time or New York. In most cases, you will see that only one of them will work better than the other. One could be a loser, the other one could be a winner. So when you're testing a strategy and you already have the idea of what you want to do, you gotta keep in mind that there are times a cycle in the market. So if you trade in the US market, you need to understand that the first 2 hours of the day are different than the 2 hours in the middle and the 2 hours at the end of the day, right? So keep that in mind when you're testing and checking your strategy. You might see that midday, it's perfect for you, but the beginning of the day, it's the worst one for you because of the volatility, right? The asset that you want to trade. If you trade in euro dollar, it will behave differently, same strategy, but it will behave differently when it comes to trading pound yen of course, when it comes to trading the NASDAQ, Tesla, or a penny stock, the big picture will remain the same, right? Supply, demand, momentum, resistance, support, all of those things will remain the same foundation for everything. But when you dive into the details, this is where you find your strategy, you find the niche, and then you understand that, okay, trading Tesla at the beginning of the day will be totally different than trading NVIDIA in midday, right? Or trading euro dollar at the beginning of London session. So understanding time and the asset that you're trading. Also the news. Maybe you will find that during the news time, you will see that the strategy that you're applying will work perfectly. But when it's a normal day with no news around it, it wouldn't do anything, right? Or maybe you will find that specific news will affect the specific asset that you're trading. And this is where you will find your edge, and you find a way to say, okay, only when the CPI, only with CPI coming on the same day, but it's London session and on pound yen, that will be the key to my trading, right? So you always want to dive in and see those nuances and understand, connect the dots basically, and understand where is your edge and how do you build that right strategy for you. Because to be honest, guys, there is no holy grail, right? There is no such thing as clicking the mouse key and 20 EMA, crossing the 50 EMA, and that's it, you're good to go. The biggest player in this game, Renaissance, Waterbridge, BlackRock, all of those guys, the biggest one that making tons of millions, are always working in that, always working to improve what they already have. That means that there is no really holy grail. They're not sitting in the beach with their laptop and sipping pina colada, right? They're working hard to craft and fine tune what they already have. And this is exactly what we need to do as traders, as retail traders that sit behind a computer and just looking for that small nuances within our strategy, within our setups. So that's about the news. Volume, if you trade in indices, right? So you will have volume. If you trade in stocks, you will have volume. Of course, when you trade in Forex, you don't really have it. Although I got to say, also when you trade in Forex, you can add your broker volume. And if it's a big broker, you will have enough volume to understand a little bit more about market behavior or the price behavior. So you can definitely add to that as well. But when it comes to trading indices or stocks, you should definitely use the volume to understand if the volume increases when you see your setup, the volume decrease. Compare the volume comparing to what we have now and what we had 10 minutes ago. So always play with those tools basically, or parameters. If you're using indicators, you don't just want to add 20 EMA and 50 EMA and then say, like I said, crossing that up, right? You actually want to look exactly what happened during the time where the London session started and in the middle of it, and what happened before that as well. So you always get the idea of the full picture and not the specific one. And we will see in a minute a backtesting strategy that I ran. And you can easily see the difference between looking at a chart and just saying entry, exit, entry, exit, entry, exit, and actually doing the hard work of diving in and trying to understand why did it work, why it didn't work, and so on. Okay. Lastly, super important for all of you guys, trading. Again, doesn't matter if you trade in Forex or commodities, indices in any kind of way, stocks, the idea of the interval. When it comes to trading, you got to mix those together. For example, if you're trading on a 1 minute chart, trading the euro dollar 1 minute chart, you don't want to stick only there. You want to see your strategy and execution, for example, in the 1 minute. But once you find that area of setup that you want to actually enter the trade, you want to zoom in and go to the 5 minute chart, go to the hourly chart, maybe the daily chart as well. Now you can compare all the setups that you found on the 1 minute chart and also on the 15-minute chart. And you will see those nuances and the behavior of the 15-minute chart as well, comparing to the 1 minute. And now you will see patterns that repeat themselves once on a 1 minute chart you have a setup and also on a 15. For example, on this one that we just talked about, the Tesla replay, right? So this is a hourly chart, but I can dive in to the 1 minute chart, for example, and then see how it behaved on that level of the 1 minute. Or I can go back and go to the daily chart and see exactly the same, trying to understand basically what happened. This is a 1 minute chart, right? So what happened while the price broke through, back to retest the support, and then bounced up. Now, this is a 1 minute, and we just saw hourly chart. So now I can start to analyze the 1 minute chart and really dive in, and maybe I will find some extra levels where I can add more to my trade, or maybe I can find some areas where it will give a little bit more confirmation to my trade on the 1 minute. The same thing goes to the hourly or the 15. So once you're mixing it all together and working with few intervals, you get a bigger or a better picture of the setup that you want to trade. And that's super crucial to trading in general. And of course, when it comes to actually understanding what you want to do and finding that strategy to put on a scanner or a backtester, basically. Alrighty. Moving forward, going to the next step will be the backtesting. This is where we already have our structure, our understanding of the market. We dived in and found, together with the replay, we found those setups that we want to set, basically. And now we need to go to a platform that will allow us to do this backtesting. Like I said, for me, for example, I used to go back many charts and just test the idea of what I want to trade just manually without using any platform like we have today. But because we have that, we can actually go to one of those and use that. Let's see. Alrighty. So one of the platform we can use, it's called TrendSpider. One of our partners at Trade Pool. Actually, when you join Trade Pool, you get TrendSpider for free for 30 days. Then you can test it and actually build your strategy. And what I'll do is just, I already clicked it actually, but I'm in a tab that called Strategies Tester, right? A strategy tester. And now what I can do is build myself any type of strategy that I want and run it. But the thing is, and this is, like I said, one of the biggest mistakes of the traders do is basically just randomly put in some stuff in it, like indicators, and maybe the price go above 5% or drop 10%, a lot of those nonsense. You want to go to the backtesting platform when you already have in your mind the exact thing you want to set, basically, right? You don't want to just play with it and throw some random numbers. 99% of the time, you won't find anything because obviously, if it was that simple, most traders would have done it already, right? So what you need to do is go here to the strategy tester. You pick your chart, you pick your timeline or the interval, and then you can run your strategy. There is one option to add your parameters. So you can choose between conditions, condition groups, load from a template, or you can also use ChatGPT. You literally write down your formula. Obviously, if it's a super complex formula, you might need to use the parameter. But besides that, this is also a great tool just to play with it at first, to understand it, and then dive into that. And what I'll do right now, I will run a simple task here. Let me remove those. And I can choose from here, for example, one of the stuff that they already have that built in. I will run it on an hourly chart. And let's see what it can come up with. Okay. Perfect. So everything you see here is on NVDA, on an hourly chart. And look how crazy good this super simple 8 EMA, 21 EMA strategy worked. You can see the red here. Hopefully you see it well on your chart. The red here is basically the drawdown. And as you can see, it's almost 1,000% in return. Everything you see on the chart is the entry and the exit. The green one was positive, the red negative. All the data that you need to know about this strategy, the wins compared to the losers, the max drawdown. But the average win, obviously, as you can see here, the losers were much higher, but the average win was much higher than the losers. So eventually, you can easily see a huge increase in the return. Again, in this area right here, you can say, you know what, that's perfectly, and that works amazing. Let's put it to the test and actually run through it with real money. But it's not real life, right? The back testing here is great. Would it work for all different assets on all different time frames? Obviously not. If I'll go, for example, to the 1 minute chart, let's run it on a 1 minute chart and see what we get. I'm guessing it will be this, actually not the same. Yeah, actually that's incredible to see, because although the max drawdown was only 5%, the profit here came out to be only 4%, right? And that's on a 1 minute chart. So of course, when you're playing on the same strategy, you're using the same strategy by applying it to a different time frame, you will get, of course, a different result. This is one of the stuff that we talked about. Here, we also need to check how long we're testing it, how far we're testing it, what was the news every single time of the trade, what was the volume, how was the volume during that time, and many, many aspects to dive into each one. So basically, if, let's say, we found that on an hourly chart, it worked perfect. Now we need to dive in for each single trade that the system showed us and understand why we entered there and how can we understand to basically to improve it or get the idea of what we can do better. For example, we might want to skip those. This is something that I see right now, very easy to spot. Here you can say, you know what, when it's sideways move, when you don't have any breakthrough, right, to a new high, it needs sideways move. Maybe you want to skip those trades and you delete them, and now you see the result. Because we're talking about, in this case, at least we're talking about the EMA strategy, exponential moving averages. So in that case, when the price is sideways, of course, the moving average won't be effective. So maybe you want to say to that platform, you know what, give me that strategy, but only when the price break to a new high, and that will give you a different result, and so on. So the same here, right? 2 losing trades. Maybe only when it breaks through, then give me what I really want to see. So you can play with it, dive in. The main idea is what I'm saying here is that you gotta focus and zoom in, but only after you have the understanding of the market and what you want to test. Once you know what you are looking for, then you apply it to a system, you go over each trade, analyze it, as I mentioned, by the news, the indicator, the volume, the asset, the time of day, the interval, all of those criterias, and only then you can get profitable strategy that you say, this is what I know that will work for me. And that's great, but that's not all, because up until now, we just played with the data of the past. Now, after we already have something in our hand that we rely on, and also, by the way, when you have a strategy that you feel that you can perform well with, and you rely on it, you basically give yourself that boost in your on the mental side of it, and give yourself that confidence that you can trade it and it will succeed. And this is also a major part of being a trader. You need to have a confidence when you click the mouse key that what you're doing is the right thing, right? But if you trade in just randomly without a strategy that you tested and know that this is exactly what you're aiming for, or you understand what the outcome would be, if you don't do that, then you're not secured when it comes to trading. And when you click in the mouse key, you don't really understand if the trade will go to your favor and so on. You will make a bad decision based on that. If you already proved yourself that your strategy works, and again, it doesn't have to be on real money, just prove and see from in time. And also when you have specific rules for that, you understand that it should work. Now it's easier for you to execute the trade the next time that you will see that. So another drink. Let's continue. I promise I'll try to go over the tons of questions that we have here at the end. But you know what? Let's break it down here before diving into the next part. Let me know in the chat how many of you guys did the procedure of what I just explained. So not just going into back testing, but actually building your strategy first by looking at the chart, going into replay mode, just going back history, throughout history, and then go to the back testing. It will be super interesting to see your comments here and understand really who did it from A to Z. Okay, nice. Manually, that's amazing. Perfect. Okay, great, guys. Super important, and I love the fact that you doing it and going through that. Try to pay attention. That's the most important thing in trading, paying attention to the details, understanding when it works and when it's not, and then try to separate the two and focus on the when it works, of course. Amazing, Gloria. Alrighty, so from here, the next step will be the forward testing. Because up until now, we just went back, tried to understand what happened in the previous without trading them. But like I said at the beginning, if you're only watching the charts or watching the backs testing, the trades that you backtest without the real trades, then you're missing the most crucial part in trading, which is the decision making. Obviously, when it comes to clicking the mouse key, you have times when you will sit in front of your computer or in front of your screens and fully focus, 100% focus on your trading, no one interfering you. You had a great meditation before, or just came very fresh to the table and you nailed it, right? But few hours later or a day after, your boss yelled at you, or you had a fight with your girlfriend or your boyfriend, and whatever it is, maybe you're sick or just not in the mood of trading, but you sit down to trade, and your decision making, even though you saw the perfect setup, your decision making was awful because you're not fully committed and not fully in focus. So when you have that, you understand that the major, like the most important element here is actually being focused to make the right decisions. Obviously, not all the time we can do that because we're not machines. So there are things around us that will affect us every single day. But at the end, you are trying to build that, or to focus for 2 or maybe 3 hours a day, to stay focused. If you're day trading, of course, to stay focused and put all the noises aside and actually make the right decision. But again, when it comes to backtesting and you're going back and not testing it on your own trades, just finding the strategy, then it doesn't mean nothing. You can see, like I just showed you, the amazing return on the NVIDIA here, but it doesn't really work that way because this is what you could have done, right? It's not something that you already did. So the next step will be forward testing, right? And forward testing means that we will take what we already have, not the ones that the backtest showed us, trades that we already have, understand them first, and then trying to see what happened on 2 ways, 2 levels, right? One thing, realizing where we actually, where is our edge, right? So, for example, like I mentioned, the time, the interval, the setup, the day in a week, the month, the asset that you're trading, all of those, obviously, the different strategies. Maybe you're trading momentum strategies, but also trend following and such. Whenever you have news, in all of those elements. And the second thing is going into that trade and see what you could have done if you would have stayed a little bit longer. If your stop loss wasn't 50 pips, but actually 25 pips. If you took half of your shares or your lots out and the rest of it went to break even. Basically, understanding what would have been a bigger or better outcome if you played with the numbers or basically managed the trade differently. Maybe you will find that you're doing everything right, but in most cases, you can find those 5% more, 10% more gain, even more than that, to your portfolio when you're analyzing and understanding that, you know what, maybe from now on, I will try to understand that whenever the price is reaching 2 times my risk, I will put my stop loss. I'm not going to take profit. I will put my stop loss at break even, for example. And then when it will reach 3 times, then I'll take everything out. Now, you already have the trade. So the decision of clicking the mouse key, you already did it. So you're taking the same trade, but you're breaking it to a different manage, right? You manage it different than what you already did. And this is something that definitely want to check out. So let's dive into some numbers and some statistics. I will show you stuff that I did, and then we can continue to talk about and see some questions that you also have. Alrighty, so this is another partner that we're working with. It's called TraderSync. TraderSync is a trading journal. And also when you join Trade a Pool, you get it for free for 30 days. So you can upload your trades from MetaTrader or from any type of broker that you're working with. And of course, through Trade a Pool trading platform as well. And this is recently, like a month and a half ago. So basically the trades that I take in my MetaTrader account, right, of course, trading with the fivers. And let's dive into the numbers here. So when I'm trying to do forward testing, right, I'm taking the same trades that I already have. And now I need to analyze the time and day and the rest of the stats that got me into that point of the profit, but also what I can do in order to make it even better. That's the first thing we want to do, right? So for example, on the right side, you can easily, those are all NASDAQ. When I'm trading on my Fivers account, I'm trading the NASDAQ. So these are all NASDAQ trades. You can easily see the weekly bar here or the chart. And you can look at two things. First of all, my Mondays are not that great. And also my Thursday, not that great. Tuesday and Wednesday, however, are super. So I know that this is only a month and a half, right? But you can go even more and bring more data. And then you will see a whole lot of numbers that support or not what you're seeing. But let's say if we have enough data here, you can see that Tuesday and Wednesdays are great for me. If you're scrolling down just a little bit more, hours wide, look at that. That's gold. That's literally gold, guys. Hourly, 1 a.m., I'm losing money. 2 a.m., I'm losing money. But then 4 a.m. and above, I'm making money. Simply as that. That's once you're watching that, and this is, just the upper level, right? We want to dive in more and more to realize what is the edge that we actually have. But only by looking at those numbers, simply as that, you can understand that I need to stop trading at 1 and 2 a.m. I need to wait to 4 and above, right? And if I'm mixing it with Tuesday and Wednesday and Friday as well, then I know that this is where I'm the best at. Now, of course, I need to check what happened on those days. Maybe there was big news coming, right? Maybe the market was at the high of the day or top or the bottom of the day. Maybe it was different intervals that I traded. Those 1 a.m. trades that got me into the losses. Maybe it was 1 minute chart. Well, on 4 a.m., I'm trading an hourly chart. So I need to dive into the numbers and really understand them. But only, with a quick, very easy look here, you can understand where are you better than the other days or hours. Going deeper, you can go into reports, and here within that you got tons of information about returns, the biggest loss, the bigger winner, right? All of those numbers that you wanna work with, the daily return, and you can also dive into that as well. This is definitely the second layer that you can touch and find useful when it comes to analyzing what you already did. Scrolling down, win percentage, and also risk-reward ratio, the average daily, the average weekly, all of those numbers. And one thing that you can also do is go to the simulator here. This is a great tool. And now you can start adding, you can see on the right, you can start adding different parameters to see basically where you stand compared to what you already have. So this is your original, right? This line right here. This is what I actually did and traded. And now I can play with it, and maybe for the days, right? Maybe I have Tuesday, but I'm also adding Monday. And now look at the simulator. So only focusing on Tuesday and Monday, my numbers would have increased dramatically. And of course, I got to go back and understand what happened on those Tuesdays and Mondays. It's not just like that. I got to dive in and really understand what happened there. What got me into the point that those are the best days. Maybe the best setups that I found was Tuesday and Monday. Maybe I was so focused on the managing the trade the right way. I had it exactly where I wanted. I scaled in perfectly, took my profit and all. So I got to dive into those days and understand what I can do with them. Here you also have volume that's more for stocks, also entry prices, also for stocks in this case. Monthly, if you add the full year, so you can play with it and see, for example, October I made almost 5K, September only 3. Maybe in time, if you have more data, you would have seen that September's or October's are the best month of your year, right? Hours, again, we talked about that, a breakdown of the hours, and now I can play with them and see exactly what would have been the outcome if I only traded Monday, Tuesday between 4 a.m. to 6 a.m. And if I add a few more assets here, I also could have seen maybe that I'm better of trading gold compared to NASDAQ and so on and so on. Alrighty, so definitely check them out, Traders Sync. And again, if you join in and trade a pool, you get it for 30 days for free. You can upload your trades from MetaTrader or any platform that you're working with, and then start to play with it and understand it. Of course, you also have a market replay here that you can apply, and you can tag your trades as well. This is one stuff that I really love to do as well. Basically, add a tag to each trade that you take. So, for example, if I'm looking at the trades that I made, right, and now I go into one of them, I can tag it, write down what was the strategy all about. What did I like there? Or is that an hourly trade on buy the dip or 1 minute chart MACD diversion, right? So once I have all of that, this is also something that I can say, you know what, that's perfect. I can use that for next time because it worked before, it might work again. And the second layer that we can use, as said, is, I'll put it on, let me get my account here. And let's see. So if I'm going to MetaTrader, for example, okay, so I'm in my MetaTrader, and now, as you can see, there are basically the dots or the area where I entered. What I can do is dive in and understand how I traded it and how I could have traded it better. For example, let's take first the easy one, right? This is one of the trades that I made. Again, that's the NASDAQ. And I took that short from here. Hopefully you see it well. And then added a little bit more here. And then when it dropped, I covered some here and then covered here. And I took another tiny short from here to here. So let's focus about this one. So I'm asking myself, I'm looking at the chart, I'm looking at the trade, and I'm basically understanding or asking myself what could have been done better, right? On execution and also on the managing part. So execution, I can easily give myself, that's the top. So I can easily give myself a 10 out of 10. That was perfect for me, at least. I'm okay with doing those executions from here and not taking literally the top. That's great. adding to my position. That's also a nice one. Looking back, I could have had maybe a little bit more when it bounced a little bit back. But technically, the idea of adding to my position here was also great. A drop, a retest. It took it a little bit longer than expected to work, but basically, I also like the fact that I added here well. But now let's talk about the my profit here, right? So I took some when it dropped, and it dropped to the previous lows, right? Those areas here. So that makes sense that I would take some. But then we had another move to the upside. I took another short, and then when it dropped, covered both of them. So in this case, we're looking at this trade, this old trade, coming to that support areas. That was a very nice move for me on both levels, the entry and the exit, right? So I'm okay with doing those. And I would definitely keep a screenshot of that to remind myself how I want to see the setup and what I'm looking for exactly. But going forward, look at the trade that I made, 2 trades that I actually made here at the top. Let me zoom in for a second. Okay, that's the first one. Here at the top, I shorted the Nasdaq. Again, I didn't take the high here, but actually entered a little bit lower. I'm okay with that as long as I'm within the full structure. So I'm still working the structure, so that's fine. Added more, very similar to what I did before, right? The drop, entered, bounced, added more. So those 2 are great. And also added more when it broke the structure right here at the bottom. So those 2, the entry-wise was great in my opinion. But look at what I did when I exited, right? It dropped, I took those stops and basically market orders actually, and got out of that trade when it reached those support areas. So once it broke and dropped to this area of support, I took all of my trades out and covered my short. Then look what happened. Now, of course, when I'm entering a trade, I don't really know if the price will continue to drop or not, but I need to give myself the opportunity, or to give the trade the opportunity to work. I cannot just click the mouse key, get out of the trade, and nothing else. So in that case, I didn't do that. And you can only hit your heart when you see this kind of move, when you already perfectly executed that entry, but got out super, super fast. So one of the stuff that I can definitely understand is maybe keeping some of it, as I usually do, by the way, keeping some of it at break-even point, like 10%, 20% out of your full position. Just leave 10, 20% to run. In that case, it could have got me a huge trade compared to what I already, from what I took actually, right? So this is one thing I can test and see. Maybe maybe I would say that going back, all of my trades are actually, let's say, similar to that, and I'm taking it partial super fast without waiting longer, or without keeping some portion of my position in, right? So that's that. And also looking at the bottom here, look at my trades here at the bottom. I took a long right at the bottom, and look what the Nasdaq did today or yesterday because of obviously the election. So I took the best setup, the best trade that I could have found, right on the bottom, breaking that support, playing with it and bouncing up. But I, instead of waiting and staying longer in this trade, just got in and out super, super fast. So these are my entries, my buy orders, and these are my sell orders. This is an hourly chart. This specific trade I took actually on a 1 minute chart. In most cases, I would trade at least today because I'm in a lot of meetings and a lot of other stuff. So I would take trades from the hourly chart. But in this case, I took it on a 1 minute chart and just took the tiny bit of it instead of letting it play and build and then have this nice push to the upside. So I know on my trading at least that in most cases you won't see me trade like this and you won't see tiny chunks like tiny moves that I would take. So I'm not that mad at myself, but this is definitely something I can work on and understand what happened there. And I know what happened there. I was mad about losing that big short here, that huge short. So I got myself into a position where only, you know what, I gotta give myself something more than what I just took. So I know that the psychology part of it played along here and got me into that position, or at least not got me into the position because the execution was right, but managing it wise, taking my partials out was something that got affected because of the previous drop, the previous short that I missed most of that move. So in that case, I know what happened, but it's unlikely for me to do that. In most cases, you would see me, as you can see, play along the line, taking a short from the top, covering, maybe switching to the other side, shorting it from the top, covering when you see a drop, and so on. This one is really a rare situation, but still, learning from it will give me another edge and another understanding of what I need to do for next time to improve myself. So that's about it. Now let me see your questions, and of course, if I missed anything or if you have more questions, keep them coming. I'll try to go over. There are tons of them, but hopefully, what we did right now, even if it wasn't brand new to you and you do some of the back testing, hopefully I gave you some ideas or angles to look at it differently or give you some advantages for next time to improve your trading. Let me know what you think. And also if you have more questions, I'll try to go back, but there are tons of them. So hopefully I won't miss anything. All righty. Yeah, Christian, psychology is definitely the key, no doubt about it. All right. Okay. The guy that asking Thomas, you're asking about MetaTrader. You can download it, yeah. Sure. Yeah. Okay, so for today, asking about assignments. So for today, guys, what you need to do is pure simple. You need to take 5 charts, mark the supply and demand areas or support resistance, price action, and then go back in time and find that again, like we did at first with Tesla, if you recall. I think it was Tesla, actually. Let me see it. Go back in time. Yeah, I think so. Right here. So you go to TradingView, for example, or any type of account that you have, and then just go back in time, try to find those same market structures, same elements that we talked about. This is by far the most important one for you guys. Just understanding first the bigger picture and then diving into the strategies. FIT, you're asking about how to trade after a large move. You mean probably the Nasdaq, or I'm guessing also on Forex, you had big moves. In most cases, just sit this one out. The idea is basically, but if you really want to trade it, just wait till see a major resistance level on this one, right? For example, looking at the Nasdaq, right? Okay. So the Nasdaq did a crazy move to the upside, but you still have this resistance right here. So I would expect it to play with this. So basically reaching this area, then get rejected and short it. The other option, break through it, retest it, and then continue to the upside. So those are the two plays I would look for. So you can do your assignment on TradingView. Right. And again, as I said, if you're looking for, this is the Nasdaq that I just talked about. Again, if you're looking for journal, you can definitely use TraderSync. If you're looking for backtesting and much more, Transpire would do the work for you. Amazing. Nasdaq is also my favorite, I gotta say, although I'm coming from stocks and always into stocks. Nasdaq is, there's something about it, you know. Alrighty. Perfect, guys. So, TradingView, okay, you're saying you need a subscription for that. I know that they do have a Black Friday. They're gonna have a Black Friday discount, so maybe try to check that. There are other platforms as well. Just Google it. It will be kind of easy to see. Don't you think to ride a trade for a bigger profits is better to use 9 EMA? Yeah, I mean, Vij, you can definitely use, for example, the 9 EMA to ride a trend. Of course, remember that, you know, when it comes to what we just saw, a lot of it are already was there, right? When I traded it, for example, I took that short from the top on the Nasdaq, so I didn't really know that this is it. We're going to the big move. I knew that, or had a feeling, the idea that I will have a winner trade here, and I'm right on the direction, but I didn't know that go all the way. So you can definitely use the 9 EMA, see how you tested it. This is exactly what we talked about here on the backtest. So check your trades, see what would have happened if you use the 9 EMA every time to make a decision on exiting the trade, for example, and check the asset, the hours, all of those details that we covered, and then see if it works for you. Maybe you will find that the 9 EMA will be great for a London session, not for New York, right? Euro dollar, but not for pound yen. So just dive into that. The only indicator that I'm using is the MACD, MACD. That's an indicator that I will use. To find negative divergence or positive divergence. Yeah, C-Trader, you can try. Don't know about them. Okay. What else? I'll try to answer them. Keep them coming. We can answer also after the live show. I know that my man Mitch is waiting on the other side, is waiting for us to start the New York session. So for those of you, actually not to start, but continue. So for those of you who want to stick around and trade with us, keep doing that. I'm gonna bring Mitch here, and we will answer some of the questions later on as well.